setting your focus is important. Where focus goes, energy flows. As long as you can focus, get started. It's not about winning or losing on day one. It's about the infinite game, if you know what that means. This is not about winning or losing.
So, Karan, I wanted to ask you this question. Basically scaling in short-term rentals. You obviously, did a cash out refi. How do you see people in this economy and in this day and age? Say if they probably bought one short-term rental 2 years ago when the economy was very robust for short-term rentals. COVID had hit. Everybody was heading to these short-term rentals because they were sort of isolated and everybody wanted their own space. But now hotels have opened up and short-term rentals are kind of still existing, but how do you see this space evolving, and people who say already have one or two, how do you see them scaling up, and how do you see new people coming in into the short-term rental space with whatever's happening?
I think what's very important to realize is that short-term rentals have always been there. Pre-COVID, post-COVID, it's still there, right? A big factor of your success in short-term rentals, one, you have to acquire right. Do not overpay for these properties. If it takes you it'll take you longer to acquire right now with all the different factors to consider with the financing situation, all that. But you have to look at it as, I think the financing situation is temporary. These 8% rates, they're temporary in 2 to 3 years, it's going to come up. In fact, I am putting in more offers right now than I was putting in a year ago because there's less buyers in the market. And I know the 8%.
And I want to point something out over here. It's not the 8% that defines the investment. It's the numbers have to make sense. So even with an 8%, I will buy a stellar asset if the numbers make sense for me. So, so a lot of people have asked me, hey, the mortgage rates are going up. What am I supposed to do? How are you going to buy? Blah, blah, blah. I'm like, it doesn't matter to me. I don't care about what the interest rates can be 20%. But if my numbers still make sense, I will still buy the asset if the numbers make sense.
That is correct. And I think, just so people understand, they make so much noise about the interest rate. Go into your calculator if you haven't. I don't know if Avishkar are going to provide a calculator for people to use. Go inside that calculator and change the rate from 6% to 8% and see how much difference it makes. If that $200 a month is going to make you that much difference, the deal wasn't good to begin with.
Exactly.
If that's the difference between a good deal and a bad deal, don't do it anyways, right?
Exactly.
So focus on the numbers. Don't let the interest rate kind of scare you away. Like I said, I'm putting in more offers now and all my offers are very aggressive. In the short-term rental space, at least I put in offers I'm going 10 to 20% below asking, right? I'm going in creative financing. We're doing creative financing. I have a deal, an offer I put in that they're actually seriously considering it. 4% seller finance for 5 years.
Wow.
5-year balloon.
And then a balloon.
And 30-year amortization. I'll take it all day long, right? I'll pay them asking price for that, right?
Exactly.
So again, you got to work out the numbers. It's the numbers. You can slice and dice. Don't get emotional about it. Just go with the numbers. As long as the numbers work, it's a good deal. So, and again, talking about scaling, right? Scaling becomes really important. The way in this environment, you're going to have to scale. Unfortunately, those cash out refi days are gone. The fast growing equity days are gone. But they'll be back, buy the property right. Try to buy it below asking, below ARV or, after rehab value that they call it, which is below the actual market value. Try to buy it below market value. So let that give you a little cushion in terms of equity. So if the market does go down a little bit, you're not stressing it out. And then what's going to become important, and I actually think short-term rentals, from my perspective, because I'm biased and I've seen this experience, short-term rentals help you scale very quick because of the higher cash flow.
Okay.
Just to give you an example, right? If you buy a property that's $800,000, my criteria for that is that it needs to generate at least $125,000 in revenue a year, top line revenue. On $125,000 top line revenue, after you pay down your mortgage and you pay down all your expenses, about 40% of that is positive cash flow.
Right.
35 to 40% is actual cash flow, or whatever. So I'll say, 40,000. Okay, on 125,000, after you pay your mortgage, after you pay all your expenses, you get about $40,000 in cash. Your second property now, you're actually 40,000 richer to go buy another property. Add up some more money, buy a second one. The third one becomes easier. The fourth one becomes easier because the cash flow combined allows you to buy a property faster and faster and faster, right?
Right.
As
Right.
long as you are very strategic about it, keep the vision clear and stick to your path. I always say, you make a decision and stick to it. As long as you're committed to that decision, you can stray on that trajectory. Yes, we had the advantage a couple of years ago to accelerate much faster, but it's not impossible. You're maybe a couple of years behind, but it's not.
Hey, it's all in cycles.
And if you think about the scale, right? 3 years, $10 million portfolio, right? Yeah, okay. In 3 years, you might be at 5. So what? So what?
Right.
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 And,
Exactly.
and again, just so people get a picture of where this could go, right? We're in the process right now. We're on the contract on a property that is a $5 million purchase, and we expect a rehab budget of $1.5 to $2 million. So now we're going big. This is a $7
Right,
million
right.
property that
Right.
we're under contract right now. And this is one, again, it's scaling. We're going to be partnering with people. It's going to be a syndication coming out pretty soon, and we're going to partner with people, and we're going to go after something big because we want to multiply fast. We want to.
I'm
grow
glad you
faster.
mentioned
We're
about
right.
partnering, because I think a lot of times what happens is that when we look at a house, we're like, oh, we need to just put our money into this deal and we need to buy it with our own money. And I think that a lot of times that holds people back. But
Yeah.
the beauty of real estate is that you can put in sweat equity. That
Correct.
is, you can work on the property and say you don't have the money, but you can have somebody else has the money, but they don't have the time. So you can put in your time and get, partner in that aspect also. So you're still a part of the deal. You're still making the money. Of course, if you don't own it 100%, you're not getting 100%, but you're still making something for the time that you've put in. So I think that's important to understand as well.
So it's also very important, right? So the partnership, in my opinion, so this will be my first partnership deal, right? I've gone and grown as fast as I can, as much as I can. And I think, you have to define what's your strategic goal. Where do you want to get to? And now it becomes a matter of how do I get there? And that's when you start
Right,
getting creative.
right,
You partner
right,
with
right.
people, you find the resources. There's a lot of people out there who will say, oh, I don't have enough cash. I can't get there. It's not about if,
Right.
it's about how. How do I make this happen? I must make this happen. How do I do it?
Right.
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 So again, I would have, a few years ago, I would have never dreamt of trying to lock in a property that is $7 million, right? But this
Right.
property, if it goes as per plan, this property by itself, if it goes as per plan, will generate $1 million next year.
Wow.
And it's expected that in about 4 years, we'll be doing about $2 to $2.2 million in revenue a year on a property.
Amazing.
So $7 to $8 million doing $2 million in revenue a year is a pretty big number. And
Yeah,
that
it
will
is.
increase the value of the property from $7 million to potentially $14 million in 4 years.
Amazing.
It's possible, guys. Again, this is the important thing, right? Getting started is important. Setting your focus is important. Where focus goes, energy flows.
Exactly.
As long as you can focus, get started. It's not about winning or losing on day one. It's about the infinite game, if you know what that means. This is not about winning or losing. This is about the ongoing infinite game that you have to play, for that you have to start.
All right, guys, if you haven't done already, please go check out my free video series on how to do due diligence on operators and on deals before investing in them. It's called Real Estate RX for Passive Investors, and it's available at www.rerxcourse.com. So you were telling me about, the fact that you were doing some property management now. And
That's correct.
Do you want to share about that?
Yeah. So, if you go to, we have a website called A-Stays, www.astays, Adventure Awaits, that's our brand. So AAA as an American Airlines stays, stays.com. And what we decided, because we had a lot of people come to us and say, we love what you're doing. We love your system. We love your processes. We love the way you optimize revenue. We want to make more money, whatever it is. And I think, is there any way you can manage this for us? Because remember, the tax break you get to take is in year 1, right? Year 2, if you're expanding your portfolio and going and getting more properties, you don't need to manage it yourself.
Right.
So while typical property managers take a lot more than we charge, they charge about 30%, we're a fraction of. We decided to start co-hosting these properties for other people. and we're about to launch. And obviously, you're probably the first to know about this. This we've had a soft launch because we've already had 9 doors that we started managing. Some of those are going to be put in service soon. But we're starting a full brand called Hosted by Adventure Awaits. So Adventure
Oh,
Awaits
wow.
is our own brand, and Hosted by Adventure Awaits will be the properties that we manage for others. The same principles, the same processes that we use for our own system, the same revenue maximization, helping other people grow their portfolio at a compounding rate. Because end of the day, a lot of people still have jobs, especially immigrants. Think about it. You can't quit your job to do this, right?
Right.
If you're willing to work hard in year one, get your tax break. I want you to have that tax break. We will take over the property and help you run it. Actually, we're starting this year. We're going to launch a concierge service for people where it'll be completely turnkey. You start with a coaching program. You start with property selection, market identification, strategic planning, market identification, property selection, deploying the property, getting it up and running. We will help you manage that property completely. Okay. So you're going to manage it because you want the tax write-off in year one.
Right.
For 2 or 3 months toward the end of the year, you manage it. Okay. We will help you. And actually, we're going to invoice you as a consultant, providing you guidance. Okay.
Right.
January 1st of next year, we take over managing the property on your behalf. So you put in the effort for 2 or 3 months. We'll coach you. We'll guide you through it. And we take over January 1st. You get to keep the tax write-off. We maximize the revenue. In most cases, at least the existing clients are telling us that our performance pays for our fees, so they're not able to, end of the day, this is what we do for a living. So we're able to not only take that burden off of you, but we're also pretty much, I need to earn my keep. Our fees come up.
Of course.
Our fees
Absolutely.
typically get paid from increased revenue anyways. So,
and that's a part of the whole assessment of the property. You're buying it, you buy it, understanding that it's going to be managed by somebody else. Because unless you want to manage it, which is fine, but I think it's a lot of headache. I don't have any of my properties managed by me. I hire somebody to do it. I don't have the time to do that.
Yeah, and what I'm finding is short-term rental. There's 5 or 6 different systems we use and processes. It's taken me a couple of years to get our team to this place. I have 4 people working for us now full time, 4 virtual assistants who work for us. Two are what we call concierge managers. One person called, who's a marketing person, does full-time marketing of the properties because we try to get more direct bookings. And we've got a bookkeeper, right? For people to scale to that point is very hard. That's when the work goes down. We don't, I actually don't spend much time managing my own property. The only area that I actually spend a lot of time on is revenue management, pricing, and occupancy. How do I maximize revenue? The rest of operations, my team takes care. And I decided, this was a good service to provide people. So that's why it's kind of turnkey. And if you know day one that you're going to invest in a short-term rental and you don't have to kill yourself learning all these systems and processes because on Jan 1st, Karan's taking over anyways, you know what? Make things so much easier, right?
Yeah. I mean, you buy the property based on that. So at the end of the day, it's all about numbers, right? It's not about who's doing it. And I think it kind of comes down to having an abundance mindset, because you can try to save a penny here versus do something right and earn $1. You got to decide what you want.
That is exactly right. It's return on time is more important than return on investment.
Exactly.
And I think that becomes more critical. I'm a firm believer in letting the expert handle it. I go to a dentist or a doctor.
Now, I would still say this, and I think what you're doing is great, like educating the people to understand how it works. Because you still need to know that. Say, God forbid something happens, and nothing against you, man, but I think it's important for people who are getting into this to know this, so that God forbid your property manager, for whatever reason, in any space, whether it's multifamily, short-term rental, say they're not able to, manage your asset according to your liking. You still need to know what to do next. You still need to know these are the systems in place.
And just because you outsource doesn't mean you don't need to know it. You don't need to learn it.
Exactly.
Don't think this is autopilot, guys. It's not, right? You need to know it. It is critical that you educate yourself, know it, because any investment that you make, you are responsible, you're accountable for your money, and you need to be completely comfortable with it. So absolutely, learning is critical. And honestly, we encourage people all the time. I'm like, please manage it yourself. And they can do it. It's not rocket science. You can learn to do it. You can do it. That's not an issue. But there's people in different circumstances, different scenarios, and we take over when needed. So don't be under the impression that you have to give it to a property manager. You don't. You can do all of this yourself.
Karan, my final question to you. Where do you see yourself going from here? I mean, you've come a long way, and what is your end goal?
So I mentioned about the infinite game, right? The end goal comes into picture when you are playing a finite game. When you play a finite game, you think about where you want to get to. When you play the infinite game, it's a loop you're going in. Right? It never ends. It's all about being a better version of yourself every day, your financials, your personal life. At the moment, like I said, my focus is going to be my family and my kids and my relationships. Because without that, everything else doesn't matter.
Right.
So that's my primary focus. I think, luckily for me, the trajectory we're on from an investment perspective and the money perspective, I'm in it for the infinite game. I'm here not to win or lose, but to stay in the game. The person who wins is the one who stays in the game the longest.
That's true.
And everyone else drops.
Well said.
Right?
Well
so
said.
that's bottom line. That's where I am, and we'll see where things go. And when you start setting a target for money, that's different. Then it becomes a finite game again.
That is very cool. Well said. Well, thank you so much, Karan, for joining me. And thank you, folks, for tuning in to this amazing podcast episode with Karan. And we'll see you on another fun episode.